Well done on watching video number one. Now what we're going to do is we're going to look at the market as I would if I was actually trading this market. So depending whether you're a swing trader, position trader, a scalper, depending on your style of trading, you will all have slightly different entry points, and I'm going to show you exactly how each one can be covered. So let's say you're a swing trader. Would this be a good position to actually enter the market? And I'm going to put a little arrow up there. So for whatever reason, you might think that that could be a top. Would you sell? And the answer is, if you're a swing trader and you want to catch a move like this one here, you don't want to start selling the market here. I'm going to explain why. The thing is, on the H4 chart, we can see the time that it took for that first move to develop, and I'm simply going to project that forward like that. So all I've done is just copy that time period. If you had actually started selling that market there, and we have a similar move to this market here, what's going to happen is you're going to get a price movement downwards, and all I've done is just copy that move down to give me an indication of how this fall may develop. And what you can see is that although we had quite a nice fall there, you could have made a lot of money, we then had a rebound, and it's a rebound that will allow you to get in with minimal capital exposure and maximum profit, because that rebound, this little hook that's formed here, is the much safer entry. So let's go into this top here and see how we could have worked out this level. At this top here, we didn't know that was a top. We're sitting patiently on our hands, just waiting for this market to actually break this low here. Because once we break that low, we know we have the opportunity to take a short trade with the probability that once this low is broken here and this high is not exceeded, then we have the first indication that this might be a trend starting to the downside. So how do we find this level? And let me put the arrow here. How do we find that level to take a sell trade? I've taken a zigzag indicator off to allow us to actually see price a little bit more clearly, and what I'm going to do is take out the property separators as well, the period separators rather. So we've got a couple of levels that we can look at. Firstly, we've got this order block here. So an order block is simply the candle that forms just before the turn, and this is clearly where market makers were selling because it's an up candle before a turn. And so that means that the big banks, the big money, were actually selling at that level. And so you should be aware that this is an order block. So we're going to mark that with a simple block. So we've marked the order block, but price didn't come up into the order block. So what we can do, and what you should do, is when you can see a very, very clear order block like that, also mark the liquidity voids. And I'm going to do that very simply. We've got a liquidity void from here, so I'm just going to put that line like that. We've got the liquidity void closing at this level here, just on that candle there. So that's a liquidity void or a fair value gap. And we've also got a liquidity void here and here. Now, for some reason, liquidity blocks and liquidity voids seem to go hand in hand, and you can see that when this market came back up, it touched the absolute top of that liquidity void, and then the market fell to the downside and took a fairly hefty fall as well. So it's important not only to mark the liquidity blocks, but also the liquidity voids, or what we call the fair value gaps. So now we know what we're looking for. Let's go across to the right hand side of this chart and ask the question, do we actually have a trading level? Now I can take that off because we're no longer interested in how far that swing could go down, but what I would do is I would simply mark the liquidity block that might actually be there. We don't know yet. It's early in the day to say, will this work? But what we need to see before we can even consider a short trade is we would need to see this market break down here. And if possible, we'd like to see a liquidity void develop underneath us. So the important thing to remember is that you don't have to enter into the market as soon as you think you see weakness. We've got loads and loads of time, and if that move is like the former move that occurred, this one back here, let's just measure that in time and see how many 4-hour bars that move is. And you can see that's 22 4-hour bars. So that's somewhere in the region of about 84 hours. And that's about 2 weeks. So even if this market was due to fall here, we wouldn't need to get in. We can simply just wait, because these swings take a long time to play out. However, if you're a scalper, things are going to look a little bit different. And I'm going to cover scalping in the next video. So if you like this video, please like and subscribe. And why not join our Discord group? It's free and the link is in the description below. Well, thanks for watching. I'll see you in the next one.